Hi, and welcome to the first Wholesale Investor Virtual Showcase. We appreciate you for joining. This is a time of change. Over the last month, we have seen our worlds altered. The fact that you are sitting at home watching this on a weekday is a testament to that. So before we start the showcase, I'd love to go into a bit of the history about Wholesale Investor. Wholesale Investor was launched as a magazine in 2008. In fact, we launched on October 4th, in the week of October 4 to October 8. So whilst the Dow Jones was crashing, we were launching. Many people thought we were crazy. It actually turned out to be an incredible opportunity, just as in what's happening in the marketplace right now. We ran the magazine up until 2012, when we actually replaced it with hosting showcase events and also providing an online platform. What that meant was we were able to provide an online to offline platform for showcasing companies. In 2014, we started taking our companies overseas. Our first country that we went to was New Zealand. Most people don't count New Zealand as a country overseas, but we do. We also started taking our companies to Singapore, Hong Kong, and the UK. What was powerful for us to see was how much attention and how much interest we could generate in Australian innovation in those countries, to the point that Singapore became our second home and UK represents one of our biggest markets by far at the moment, and Hong Kong is obviously still an incredible opportunity. So going forward, in 2016, we had Investec become a shareholder. Investec is a London Stock Exchange listed investment bank, and we were very proud of this as a milestone. In 2017, we had BMY Group become a shareholder. BMY Group is a financial media group and investment group out of Melbourne. And as an important milestone, this represented for us the impact and the desire for us to expand into the APAC region. In 2019, also marked another important milestone. We launched our end-to-end capital raising solution called CRISP. CRIS stands for Capital Raising Intelligent Investment Secondary Platform. As we go through the next part of the showcase, you will see that all the companies presenting, their presentations and their information has been integrated with the CRIS platform. Our desire is to make it as simple and as efficient as possible for you to get access to the information on the companies which interest you as we possibly can. As part of our next phase of Wholesale Investor, we'll be introducing a new aspect of virtual showcasing. The virtual showcasing component is really exciting for us because what it means is we are not constrained by the limitations of the city which we are in. It means that we can provide a streamlined solution, but as I mentioned before, it means that we can also integrate it with CRISP. And with CRISP, as I said, CRISP stands for Capital Raising Intelligent Investment Secondary Platform. For us, what is so important about this is when we were building the platform, we started thinking about it sort of 2 years ago, we realized that the ecosystem, firstly, it was fragmented, secondly, it was frustrated. So some of the issues that the ecosystem faced was a lot of the tools that were available, firstly, they were isolated solutions, they were also manual, there was typically nothing that brought the ecosystem together. And this was really behind the design and behind the thinking. So the thinking behind CRIS is how do we help companies and help investors and also help the industry save time, save money and improve efficiency. So the key components of what we're building into CRISP as a capital raising software is firstly, it is software driven. Secondly, it's ecosystem enabled. Thirdly, it uses intelligence and data so that we can capture information and help utilize that for more effective matchmaking. And then fourthly, it is an end-to-end solution. The other part to it is then we started thinking about, okay, what other requirements does the ecosystem have? And from our perspective, we thought, how can we leverage off what we've been able to build to more effectively matchmake, but then also to provide modules going forward, which that resemble that of what someone would experience when they're working with an investment bank. So the way we're positioning CRISP is that what we are building for you is a digital investment bank for SMEs, right? Or for growth companies as it may be. And that is really important for us in the next part. Because what we realize is that in dealing with the innovative ecosystem, basically, we need to collaborate. We need to unite, and we actually need to bring the companies, the investors, and also the industry together. And we see that as our role going forward. We understand the challenges of what's about to take place because effectively this ecosystem has grown massively in the last 5 years. And with the challenges being experienced around the world in the private capital markets and also in the public capital markets, that collaboration is more important than ever. So for our future, what we are thinking about is how do we serve you? How do we be more aggressive? How do we help accelerate the growth of the ecosystem even during challenging times? Because I can assure you the biggest thing that we have learned over this past month is that you can never deny the optimism, the passion, and the drive of founders. But what I also love is that it's equally matched by the investors. So the most beautiful thing about for us, and whilst it's a challenging time, the people we get the opportunity to deal with, they are fundamentally optimistic, they are absolutely aware of the challenges that they are about to face, but thirdly, they are still driving for change. And what we're about to see is there are going to be sectors that are about to shine. There are obviously going to be sectors that are going to have challenges. But ultimately, what we want to make sure is that this ecosystem keeps driving forward. So over the next hour and a half, we're going to be introducing you to a range of companies that are currently raising capital and looking to attract investors. Our hope in doing this is our opportunity to remove the borders and the barriers for companies that are raising capital and the global barriers that typically take place in this area. And from our perspective, we want to do everything we can to serve you as company, as an investor, and as industry participant in the drive of this ecosystem going forward. We hope you enjoy the showcase. We welcome your feedback of how we can improve this for future events, and we look forward to collaborating with you.
Our first presenter is Director Phil Spencer. From the UK-based supplier of responsibly sourced gemstones to all levels of the industry supply chain. Over the past 6 years, London DE have become an award-winning operator within the industry, including recently winning the coveted National Association of Jewellers Jewellery and Watch Supplier of the Year award. Now I'll welcome Phil Spencer to start his presentation shortly.
Good morning, I'm Phil Spencer, the founder of London DE Fine Jewellery. I'll begin by outlining the background to our business, our market and our USP. I'll then explain why we're fundraising and how we intend to employ the capital. Crucially, we will explore what's in it for me. I will then take you through some of the industry and SME awards we've received. And finally, I'll summarise the opportunity at the end. I'm going to start with a short video to give you a high-level overview of our business, our market, and the opportunity. I'm Phil Spencer, the founder of London DE. I founded London DE in 2013 with the aim of disrupting the jewellery and gemstone market. We do this with an ethical, lean business model designed to deliver high quality at below high street prices. Coloured gemstones change hands many times before they reach the shop window in what is a highly inefficient process. The global coloured gemstone market was worth more than $2 billion in 2018. London DE's aim is to produce gemstones and bespoke jewellery to business and retail consumers in a smarter, more cost-effective way. Our mind to market model means we can operate at all levels of the supply chain, both B2B and B2C, taking advantage of both value and volume opportunities. Our stones are sold at various stages along the supply chain, but our finished products, handmade here in London, are sold to both the local market and exported around the world. The process begins by buying coloured gemstones close to their mines and distribution centres and ends with them being produced into finished goods here in the Hatton Garden workshops. At London DE, we work to order, operating online, over the phone and face-to-face without the need for costly retail premises. As a consequence, we can deliver our products at competitive prices without compromising on quality. Our aim for this campaign is to grow our business and cement its position as a leading brand in our market.
Well, I'm really pleased to see not only how much commitment, how much work they're clearly doing with the constant updates that I receive. There's always something new. It might be a new retail channel, it might be a new market like the Middle East, or there's a luxury partnership in the US. So I see a business that's dynamic and it's growing and it's ambitious.
In December 2018, we were very privileged to have been awarded Jewellery and Watch Supplier of the Year in the National Association of Jewellers Awards. We featured in several industry publications as well as in Tatler, and our customers have given us an excellent 5-star rating on Trustpilot.
Well, in terms of the quality, don't take it from me. The best I can do is show you my wife's ring, and she's here now.
Operating at the crux of a market that is due to expand by more than 500% over the next decade, we are in a unique position to become an ethical force within our industry. With your investment, we can expand our business, grow our international focus, and increase our purchasing power. This will help us drive the business forward, delivering consistent and growing returns. Thank you for watching, and I hope you join our campaign. My background experience began with 5 years service as a commissioned officer in the Royal Navy. I went on to work as a stockbroker in both the City of London and as a wealth manager in Dubai. This gave me invaluable experience in terms of teamwork, leadership and management, as well as a founding in financial services. I've always wanted to be an entrepreneur and build a company from scratch to scale in an ethical way. I've also had a lifelong passion for gemstones and jewelry. So when the opportunity arose to merge the two into a business in 2013, I took the leap. We started from a blank sheet of paper, and I gradually grew the supply infrastructure and client base, running most aspects of the business myself for the first few years. We successfully crowdfunded on the Seeders platform in 2017 and again in 2019 to propel the business forward. The coloured gemstone market is one of the last great unconsolidated global industries, relying on lengthy supply chains and artisanal mining operations. As you can see from this chart, demand for emeralds and indeed all coloured gemstones has risen substantially over the past decade, generating significant tailwinds in our industry. Coloured stones are very much in focus with the major fine jewellery designers, retailers, collectors and celebrities around the world. So as alluded to in the video, we're engaged in a market that is set to grow by over 500% in the next 10 years. We have a written exclusivity agreement covering Europe with one of the leading distributors of Colombian emeralds, who also have the largest Instagram following of any coloured gemstone dealer in the world. Our talented team includes a Gemological Institute of America gemologist and a fluent Chinese speaker, a sales manager with over a decade's experience managing sales teams with large players in our industry, and a marketing manager with more than 5 years experience performing a high-level marketing role at KPMG. So why are we fundraising? This is the mining region of Muzo in Colombia. Typically, emeralds produced here pass through as many as 10 to 15 hands prior to reaching shop windows. This is an unintegrated and inefficient supply chain. We aim to achieve the economies of scale by bulk purchasing stones via our network close to source. This also has the benefit to investors of offering a fixed and floating charge over our assets, the gemstones we hold as inventory. We're involved in the development of software that will enable us to both sell our own inventory and broker those of other companies. We already have well-established access to South American gemstone networks. Our mine-to-market approach not only affects key efficiencies in our supply chain, it also improves transparency so we can be certain which mine a stone has come from and its associated labour relations, environmental standards and health and safety. Now, these guys are emerald miners, and we took this photo during a recent visit to the Chivor mining region of Colombia. Investment in us helps to promote best practice within the mining regions, whilst also integrating a supply line and offering a high return on investment. We're offering £1 million in loan notes, having raised just over 50% already. These are over a 5-year term with early exit available after 12 months, paying a monthly coupon at an annualised rate of 10 to 15%. We're also offering a £1 million enterprise investment scheme equity release to balance debt with dilution and providing for income or capital growth alternatives. We've raised 20% of this so far. Exit horizons are 3 to 5 years for all our investors. Options for this on the equity side include an IPO or the sale of the business either in whole or in part to one of our larger competitors. We are an established business, so we're funding for growth, building upon solid trading experience. We're looking to employ investment broadly between 3 main channels: research and development, inventory, marketing and sales. Between 2013 and 2015, we consolidated and formed the business. This led on to a number of SME and industry awards. We're fundraising between 2017 and 2020, looking to launch a new e-commerce platform in the mid part of 2020. We're developing a business-to-business API as we speak. We should have a full inventory of coloured stones acquired by the early part of next year, 2021. With our B2B API launch in 2022. 2022 to 2023 will be a period of global expansion. and our investment horizon for debt and equity investors is between 3 and 5 years. We were delighted to win the 2018 National Association of Jewellers Awards for our outstanding contribution to our industry. The NAJ are the leading professional body in our field in the UK, so we had to fight pretty fierce competition to achieve this recognition. We were also finalists in the Ethical Jewellery Business of the Year category in the 2019 Retail Jeweller Awards. This was especially poignant for us as ethics and integrity are at the core of our business model. We've also been recognised for our achievements as a successful SME, including the 2016 KPMG Awards and the 2018 UK Enterprise Awards. So in summary, we're looking to raise 1 million in debt in conjunction with 1 million in EIS sheltered equity. We're offering capital growth and fixed income alternatives, including tax efficient EIS shelter and a charge over the key assets of the business. We're positioned as an ethical force in our industry with a keen focus on responsible sourcing and transparency. We've built key partnerships and relationships in Europe and the Americas. We're a hybrid business with low overheads and both business to business and business to consumer channels. We're expanding and growing our team, and we look forward to welcoming our new stakeholders. Thank you for your time.
Thanks, Phil. Our next speaker is Mark Mees, CEO of Setek Therapeutics. Setek is a New Zealand-owned bioscience company which aims to cultivate, process, manufacture and market pure organic pharmaceutical-grade cannabinoid-based medicines, as well as cannabis-infused cosmetics throughout the Asia-Pacific region. Now we'll welcome Mark to the showcase for his presentation.
So hello everybody, thank you for joining us. My name is Mark Mees. I'm the co-chief executive of Setek Therapeutics, and I'll be with you for the next 10 minutes or so and giving you a brief introduction to our company. So moving on, established in 2018, just about 2 years ago now, in Taupo, New Zealand, by myself and my business partner David Pearce up in Taupo. So we set the company up with one very clear goal: to become Oceania's lowest cost provider of organic pharmaceutical grade cannabis products. So a focused low cost provider. We also have introduced to the mix a second product line, which is a cannabis, an all natural, ocean safe, cannabis infused skincare product line. A couple of benefits to that, which we'll explain as we go through the presentation. We're very much a research-based organisation, and in fact, I think half of the team hold doctorates. So very much research-based, scientific-led, but also purpose-driven, and all of us share that common passion and the goal for what we're doing, which at the end of the day is all about helping people, right? So every startup wants to be profitable, but we also wanted to ensure we built a business that was sustainable, that was resilient, and that would return shareholder value in the longer term. And so the vertical integration and other elements of the business model are designed very much with that in mind, to deliver long-term profitability as well as short-term returns. And we've also got a very clearly defined exit strategy, and David and I anticipate a public listing sometime in 2021, possibly 2022, but for sure we'll be looking at an exit strategy. So moving on and just introducing you very quickly to our team. Our board comprises the former Associate Minister for Health for New Zealand, the Honourable Peter Dunn, and Charles Bolt, formerly Chief Legal Counsel for Fletcher's, Martin Gray, former Head of M&A for Ernst Young, New Zealand, and David and my good self. Wonderful team, a number of doctors, scientists, Mark and Janet that run our GMP and quality management team, Sean, our lighting engineer, extraordinaire. So what's the problem we're solving? Well, we are targeting two specific indications, and those are pain associated with arthritis, chronic pain, and also sleep disorders. Now, there are a raft of medicines currently available, conventional pharmaceutical treatments, but unfortunately, a number of those produce unwanted side effects and or addiction dependency issues. You'll know about the opioid crisis. And so we've set out to address those two indications with a range of pharmaceutical grade, quality assured, safe, consistent, non-addictive medical cannabis products. We're pure organic, and as we've said before, we intend to be Oceania's lowest cost provider. So it's about making affordable medicines. We should talk just very briefly about the size of the opportunity. We're looking at a $12.3 billion worldwide market in American dollars, and Oceania on its own, something to the tune of 2.5 billion by 2028. And to really ground that number, you've got an average global cannabis consumption in the region of 3%, but in the Oceania region, that's more, some would suggest as high as 14%. So you've already got a market that is kind of quite accepting of cannabis and especially medical cannabis. CBD skincare market is growing, as is the organic market. But a good question is why now? Why now for us, for Setek, and why now for you investing in Setek in the cannabis sector? Well, we set out very deliberately not to be first to market. We're very deliberately a relatively fast follower. We've reduced our cash burn, shaved millions of dollars off of our model that other people have been burning. The Australian government are only now reviewing their current scheme and making it easier for patients to access medical cannabis. The New Zealand government are literally a few days away from launching New Zealand's medical cannabis scheme. And for the first time, we're starting to see now patient and prescriber uptake numbers that are looking more realistic. That kind of growth that we're seeing now, that curve in patient uptake particularly, we'll see the numbers start to look interesting by around about early mid 2021. You know, and when I say interesting, some level of critical mass, something worth going at. And so our timing, very, very deliberate to enter the market at a time when the patient uptake curve is really meaningful. As I've just alluded to, the focus low-cost provider status, part of our broad differentiation strategy. Vertical integration, although part of that is outsourced via an MOU agreement, a strategic relationship with AFT Pharmaceuticals, we'll talk about. Pure organic, I expect will be one of only one or two organic producers in New Zealand. It's the path less traveled. It's technically very, very challenging. And it's one of the reasons we've brought together a team of artists and scientists, you know, horticultural science, agronomics, micropropagation, all of these things. The acquisition of Southern Hemisphere Botanicals has added around about 50 very unique cultivars to our library. Exclusive genetics, which I'll touch on a little bit later on. And the MOU, the strategic partnership with AFT Pharmaceuticals, just to look at that, the experience, the 20 years experience they bring in market access, product development, trialing, testing, all of these things, not to mention the distribution infrastructure, really set us aside from every other New Zealand medical cannabis company and most other Australian medical cannabis companies. And just to drill down into that in a bit more detail, there are some cannabis companies, medical cannabis companies, that will agree a deal with a nationwide distributor, and there'll be one of a handful, 3, 4, 5, 6 medical cannabis products being presented to the marketplace, to the pharmacists, the doctors. prescribers. But as far as I know, Setek is the only medical cannabis company in New Zealand that has an exclusive nationwide distribution agreement in both Australia and in New Zealand. And what that means is you've got a team of 40 or 50 dedicated sales and marketing professionals traveling around talking to those 6,000 pharmacies, clinics, palliative care centres, hospitals, research centres around Australia and New Zealand, pushing only Setek medical cannabis products. Very, very important point of difference. Hey, there's a few other elements to our business that we think make us a bit different, but there's the information memorandum with a whole raft of detail. You've got a few more pointers here you can read at your leisure, but we've got a lot going on that make us very confident for our future. A few key achievements over the last 2 years, probably most notably getting Stacey Fraser, one of the original formulators from Trilogy, that, for those of you that don't know, an all-natural skincare company, a bit of a pioneer in the natural skincare world. Stacey was one of the early formulators. That company sold for about 300 million, I think it was, dollars recently to a Chinese consortium. We're very, very, very pleased to have Stacey on board, and she's developing our range of cannabis-infused skincare products. The recent acquisition that you may have seen in the news of Southern Hemisphere Botanicals, again, very key to piecing together that value chain, and everything starts with great genetics, Moving forward from the genetics, you need to then realize those yields, those potentials for your crop, and we're very pleased to have acquired the IP of LED lighting company, and the proprietor of that has joined us as our senior design engineer. And of course the MOU with AFT we alluded to. There's the deal with AFT. It goes way beyond just distribution. Again, they've been there, they've done it. They have the expertise in product development, in the testing, the trialing of products, and the oftentimes complex regulatory requirements to access each of these international markets. So we're very much looking forward to working with Hartley and his team. Well, we already are working with them, and we're really optimistic about the future of that relationship. Most recently, we also agreed a multi-year offtake agreement with NZ Vapor, and that will see us supplying CBD I don't want to drill down into too much detail on that now. That's commercially sensitive, but we'll be providing CBD and other extracts to them. So the revenue strategy at very, very, very high level. The great thing about, or one of the great things about the cosmetics for us is that while we're taking time to work through the testing and safety and the market access requirements for our medical cannabis products, which can be quite timely, we have a simpler pathway to an early revenue through our skincare products. So we expect to launch the skincare in October, November of this year, and followed by the first medical cannabis products and around about April of 2021. And as you'll see, we start to break even, and the numbers look really good from 2022 onwards. And going back to the low-cost provider status, we've built our entire model predicated on the future retail price of medical cannabis being 10 cents per milligram of cannabinoids or APIs, active pharmaceutical ingredients. And we've built the whole model around achieving, therefore, the cost base we need to deliver on that. Very important part of our strategy, and we believe most of our New Zealand competitors will not be able to get there. So there's just a bit of a view of our financials. Again, you can go to our information memorandum, which is in the deal room, which will give you more detail around some of these cost lines. But in a nutshell, we're up to 48, almost $50 million by 2024. And this is based on far more conservative projections than we've seen from some of the other companies in the sector. What I would like to say, more realistic projections. So the offer at a glance. We're offering up to $3 million up to 10% stake in the company for $3 million of funding at $1.70 a share. The minimum investment value at the moment has been pegged at $25,000. So we'll see how that goes. And I should just mention this is part of a much broader capital raise. But the $25,000 minimum investment is an offer exclusive to the Wholesale Investor network. So you're going to want to know how we're looking to use those funds, and we've given you a bit of a detail here. It's still early doors, but this gives you a bit of a high-level view of how that looks in terms of the operating costs. Worked very hard to keep those salaries down, and the director and consulting fees, etc. And you'll see we've also revised for those of you that have read the IM, you'll see that we've revised our capital expenditure plans. Now, we absolutely can't deliver this presentation without talking about the turmoil and chaos and the tragedy that's come with this COVID-19 situation. For us, we recognize that this just adds to how challenging an environment we are right now for fundraising. So we've had a really good hard look at our capital plan, and we've found a way to scale back on our construction, but in such a way that it does not affect our revenues, and it has only small impact on our cost, on our profit. So just to be really clear, construction phase one, it's just over a $2 million cost. That gets us up and running, delivering, executing against our plan as per the information memorandum. And the construction phase two will not trigger until such time as collectively as a group of shareholders, we're all comfortable that the prevailing market conditions and our internal performance as a company means that that's viable. So there's the plan. We want to be up and running. We want to be selling skincare products by October of this year. We're really optimistic about the future, and we'd like to invite you to join us on our journey. There's a whole load more information available in the deal room, and we'll be happy to answer any questions that you've got. So thanks for listening. Thanks for considering an investment in Setek, and hopefully we'll be talking to you again very soon. Thank you.
Thanks, Mark. Presenting now is Greg, Leon, and Mark from Lendhaus. Lendhaus has accomplished the development of a global commercial real estate loans marketplace platform. The powerful automated processes, which utilize analytics for debt and financial forecasting, empowers borrowers to get control over more of the process, have greater choice, get shorter times to settlement, better terms and pricing. Lenders get qualified deal flow, faster, lower cost processing of loans, compliance, and easier marketplace access to new jurisdictions. Greg, Leon, and Mark will be commencing their presentation shortly. Stay tuned.
Good morning or good afternoon, depending on your time zone. I'm Leon Koutsavasilis, co-founder of Lendhaus. Having been involved in 2 marketplaces already, we have ambitious plans for Lendhaus. We're going to grow the world's largest commercial real estate financing platform to become a provider of choice. We intend transforming the way commercial real estate financing is done in a sector that is long overdue for it, especially in light of what's happening now with COVID-19. More on that later. Multiple parties are involved in the refinancing process for large-scale commercial property loans. Property owners have relied on a small incumbent number of lenders and a challenge to collate and provide information lenders ask them for. It's a slow, costly, time and money process. Lenders have a lot of work on their hands to process the loan applications from property owners, find it difficult finding quality deals, and in the early stages know where they sit in the competition stakes. Property owners in turn find it hard to decipher the loan offers that are received and do an objective apples for apples comparison of the offers. And with little competition, they can't be sure they've got the best deal. Commercial real estate is one of the biggest markets in the world. There's approximately 22.2 trillion of investable commercial property globally. In terms of the market Lendhaus is concerned with, loan arrangement fees are massive with an addressable market of $44.4 billion. By targeting the most technology-savvy 5% of that market, the total obtainable market for loan arrangement is $2.22 billion, a very large and attractive target. Within that total obtainable market, we plan to initially tackle the Australian, UK, US, and European markets. That equates to $1.25 billion. Given the size of the market, it's critical we focus on the right segments. After researching in our alliance discussions, we clearly have identified our starting segment. Lendhaus will focus on the middle market in the first 12 months to prove the platform, and because this is where the highest demand and activity sits. We know that in this sector, owners are already concerned about access to debt. COVID-19 has turbocharged that fear, and yet we have the least sophistication and control in managing the process. Lendhaus will bring greater choice, speed and certainty to the sector and provide an ongoing data management and debt processing to them. Marketplaces have always proven to ultimately improve pricing, terms and overall cost of transactions over time, sometimes in very short time frames. Think what happened to securities trading in the late 1990s. However, we also are in discussion with very large real estate investment trusts as well, who also suffer the same problems in terms of having accurate data in a way that makes it easier to manage a refinancing process. Lendhaus will start to standardize many parts of the process wherever it can, making it a win-win for borrowers and lenders, be it middle market or larger real estate investment trusts. COVID-19 is a black swan event that has dramatically disrupted global markets, the worst since the global financial crisis. Communication and transactions can now only be done online or with severe restriction on gathering size. This has caused great concern for borrowers and lenders. Borrowers are concerned they may not get access to the finance they need because of lower rent and valuations. Lendhaus will provide access to 200 global lenders with a unified process from bid to settlement, plus continuous debt valuation and loan book forecasting. Lenders are concerned their loan books will be badly affected by lower commercial property values. Certain sectors have been hit hard. Lenders desperately need accurate, timely financial information about their loan books to allow for increase in loan-to-value ratios. They also need to access good risk-adjusted deals and the ability to get these done with minimal personal contact. We have identified some heightened fears and issues for both borrowers and lenders in this COVID-19 new world. If ever there was a business case for digital platform of any kind that requires human interaction, COVID-19 has just raised the stakes. As a commercial real estate debt marketplace, Lendhaus is entirely online and not impacted by COVID-19. It has been designed to digitally transform the commercial real estate loan process. From bid to settlement allows all parties to engage in complex negotiations, get secure, verified access to up-to-date data, and manage multi-party collaborative processes to execute faster, at lower cost, and now without the need for in-person meetings if necessary. Ongoing, our clients on both sides of the equation need continuous debt, valuation, and loan portfolio analytics, as well as forecasting. Lendhaus provides this out of the box. 80% of commercial properties refinance every 3 to 5 years, irrespective of whether the property market is up or down. Today, borrowers have a hard time when it comes to finding, applying for, processing, and settling a large commercial property loan. The process is still arcane, lengthy, manual, error-prone, and dependent on lots of paperwork. Even worse, the borrowers have no price transparency. It is not clear what their upfront costs, ongoing costs, and the terms and conditions will be. They also have no process visibility. They're never sure what step they're up to in the financing process. The industry has been dominated by a small incumbent group of lenders with a very uneven competitive playing field. However, in the last year, there's been a seismic shift to alternative lenders, and borrowers and lenders now need an efficient way to find and qualify the right deals. With Lendhaus, we offer a secure place for property owners to keep their property data up to date, and we offer access to a global commercial property financing marketplace that massively speeds up the end-to-end financing process. We take a process that typically takes 5 to 9 months and we compress it to 4 to 8 weeks. This is a game changer. For the first time, property owners get real choice and access to a competitive international lender pool, which doesn't exist today. At the same time, lenders and service providers such as brokers can access a larger qualified deal pipeline so they can do more deals in much less time with the same number or less staff. Lendhaus consists of a secure property data repository called House Vault and a financing marketplace called Lendhaus, linked to a network of service providers. We use the most modern advanced technologies, including advanced analytics, artificial intelligence, and powerful APIs. Our analytics enable House Vault to be a flexible, trusted source of commercial property data. AI enables us to automatically import and understand commercial property documentation and data, and will ultimately enable us to intelligently analyze building sensor data to determine in real time the building's operational status. APIs are key to our business strategy, ensuring we get embedded into property owners' ecosystems. Lendhaus provides a very specific role in the commercial real estate ecosystem. It will become a trusted source of data at the asset level right down to tenant lease levels. We intend opening up our platform in due course to allow other companies and startups to write applications that complement Lendhaus. In fact, we're so serious about this, we chose an open, powerful technology stack and microsystems architecture to support this strategy. In time, we believe that Lendhaus will sit at the center of the ecosystem, given its unique role as the client embedded data vault. Our open API and standardization approach means Lendhaus can integrate with external data and app providers. We have a lot of experience with this model. For example, Cashworks integrates more than 50 banks. Dealer groups and now comparison sites such as Mozo. The network effect drives market share. Our roadmap includes borrowers being able to procure services and permission data, access to valuers, insurers, building and environmental services, sustainability services, etc. Apart from the growth and fee events, it also ensures better control of data capture, input and inputs, and more sophisticated notifications to aid covenants compliance. The founding team has over 40 years of experience in global commercial property lending, investment, and in cross-sector digital transformation. Our track record includes being founders and key executives at venture-backed startups that have exited via M&A and IPO. Greg Bartlett and Mark Oster founded Cashworks, a new fixed income fintech marketplace in Australia. Cashworks IPO'd successfully in 2017 through a merger. Greg and Mark stepped off the board of Cashworks in third quarter 2018 to focus 100% on Lendhaus. I'm based in London, a CTO for commercial property, SaaS pioneer Build Online. The core technology that my team and I built was rolled into a spin-off called Coral, which in turn was sold to Salesforce. This technology became Salesforce's content management and content exchange offering. We're supported by an advisory board with deep commercial property industry experience. That includes Tony Musa, who headed up commercial property lending at Deutsche Bank in Australia and New Zealand for over 5 years with a global asset securitization background. Our other advisor, Leon Reardon, is a property finance and capital markets veteran who held some senior executive positions at Royal Bank of Scotland and Ulster Bank. David Ryan was for 20 years CEO at Walker Corporation and is responsible for managing one of Australia's largest syndicated debt deals of $1.5 billion. Both Tony and Leon Reardon have been instrumental in introducing us to our property owner clients, helping prime our sales pipeline. They're also helping us with introductions to lenders for the Lendhaus financing marketplace. The two key components of Lendhaus are its SaaS-enabled data vault, House Vault, and the marketplace solution, Lendhaus. House Vault is deployed into a client site as a SaaS solution. It seamlessly includes Lendhaus access and features, but the charging models are different. House Vault is charged on a tiered SaaS subscription model, while any transaction on Lendhaus attracts a loan ranger fee. Other fee events in time will include procurement and workflow management fees for on-platform services. These service fees have not been finalised. We will do so as we introduce them in line with actual interest and demand. House Vault pricing is available in our crisp deal room. The primary income will be derived from loan transaction fees. Both the pricing models we have adopted are well understood and accepted, so not confronting at all to the industry. In the future, when and if necessary, we can become more innovative in our fee models. For now, we remain conservative. If you look at the fee models and the potential growth adjacent income potential, it's huge. Our growth strategy includes property owners and lenders. For the high-end market, we'll have our own experiences. So I'll do that again. Our growth strategy includes property owners and lenders. For the high-end market, we'll have our own experienced direct sales teams. For the middle market, we will target brokers and referrals from the business and enterprise departments of our large alliance partners. For lenders, we will onboard them filtered for refinance opportunities and then with our alliance partners. So where are we up to right now? Commercially, we have 2 refinancing clients now, one in October and one sooner, who are middle market size. Deal size is around $20 to $50 million. In the midst of an important larger alliance partnership deal with one of the big 4 accounting firms, at the commercial level, they see huge value. In fact, we refer to Lendhaus as a poster child opportunity to prove digital transformation of the debt advisory and with services in other parts of their organisation. This will kick off a pipeline of middle market deals, which I would like to see on Lendhaus, and give us access to 200 global lenders. In the first instance, a certain amount of pre-lender qualification will be done before onboarding those lenders to Lendhaus for a real deal. Over time, we will onboard most of these lenders as more deals are made available on Lendhaus. We intend starting discussions with their UK debt advisory in the next 2 months with a view to ramping up Lendhaus in the UK very soon after we start transactions in Australia. So an overlapping strategy. In terms of the platform, Lendhaus is a production solution today, though in phase 2 development, we're doing more work on evolving communications and document workflows to be more user-friendly and more powerful analytics, artificial intelligence and automation. Housevault is already mature in the data vault, able to capture administration of secure role-based access, real-time analytics, the tender, and provide apples for apples proposal comparisons. So we're in an important phase right now with clients, a platform, major alliance discussions, and COVID-19 adding urgency to getting a digital platform up and proven as fast as possible. We are looking for investors who can offer funds and smarts. Understanding this huge sector is a plus, and if you already have proven marketplace and debt experience, we would love to talk now. Thank you for your time and interest, and we hope to see you in the deal room up on Chris to answer any questions you have. If you prefer, our mobile number is above. Let's talk.
Thanks, Greg, Leon, and Mark. The next speaker today is Jim Brander. Jim is the founder of Interactive Engineering. The company has been building out a vision of an active, undirected structure in a computer, first as a decision analysis tool, then applying the technology to allow a machine to read and understand text while expanding the understanding altogether. Make sure you stay on to see Jim in just a moment.
This is a presentation trying to show what we do. The notion is that we can build a brain of some sort that is capable of reading text. In 2014, which seems like a long time ago, we built a semantic system for US health insurers. They handle 1 billion calls a year. They have thousands of policies. So the system has to read the policies and then get ready to answer questions from users. We built that system by hand, which is a laborious task, and it was within a fairly narrow domain, and that's why it was possible to do it by hand. But we're not going to do that again. It has to be self-extensible. All right, if the machine's self-extensible, what happens when it doesn't know a word? Well, it can use a dictionary. Okay, there are only human-readable dictionaries. So now we have to make something to allow the machine to read a dictionary and to take the knowledge in the dictionary and insert it in its existing knowledge structure. The big problem there is that the people who write dictionaries don't know how the person increases their knowledge structure. They write it in a particular way that they've been doing for hundreds of years, but we don't have that luxury. We don't have a person to handle the transfer. We have to fill the gap between a human readable dictionary and the machine's knowledge structure. This is a good example of the unconscious mind. This is highway going to from Tullamarine to Melbourne. And there's a sign that says either use the white lane markings or use the yellow lane markings. The unconscious mind takes the instruction, patches the lane following software you have. The conscious you doesn't have the slightest idea how the software works, where it is, whatever. You don't care, you read the sign, it all happens magically, automatically. We need to emulate that ability in a machine. We don't need artificial intelligence techniques that are brittle. We need a system which is capable of modifying its internal structure. So all the current AI technologies are of no use whatever if you want to do that. Oh, but what about chess playing programs? They can beat anybody. Chess is a very particular game where you can see the state of the game with a glance. You don't have to remember any of the moves in the past. And the rules were last changed 250 years ago because Catherine the Great didn't like the way the Queen only could move one step at a time. So yes, it's a triumph to make a chess playing program that can beat anybody, but it's also completely useless in the real world. Oh, what about adding numbers together? Sorry, these AI methods we're talking about, they don't add numbers together because that's not what they do. They use statistics or with chess scenarios. If we are going into dangerous new environments, and let's count them, there's Mars, there's climate change, and now there's coronavirus, where you don't have any statistics or scenarios that are worth a damn. If we're going to build intelligent systems, they have to have analytic ability. What's the competition for our system? Well, people are the competition. People can do all sorts of wonderful things, like fly helicopters. Helicopters are about at the limit of what a person can do. And even now, for hazardous maneuvers, the maneuvers are completely automated because the person's unreliable. An application, here's a simple application. Google hasn't changed their search method in 20 years. It would be nice that you could type, this is what I'm looking for, go away and find it. And the machine would go through the million hits and turn them around and look up words it doesn't know and do everything that you don't want to do. And when there are a million hits, the machine can find another 1,000 friends to help it. So it all becomes possible, whereas you hunting through a million hits isn't going to work at all. Why haven't people done this already? It must be fairly easy. No, we're at the bounds where the machine has to start thinking about its own structure and changing its own structure. So we have all these generations of expert systems, neural networks, intelligent agents, machine learning, deep learning. They are all very narrow and brittle. They sound wonderful. Oh, a machine that can learn and it changes its algorithm. Sorry, algorithms are not relevant to this area. There's been a whole lot of marketing babble for the last 30 years, with each generation promising to fix the last problem, but bringing in a whole raft of its own problems. Okay, you can do it. Then if you can do it, everybody can do it. Well, not quite. We're not good at programming. We're interested in knowledge structures. And if you're interested in handling English, then it would help if it's baked into your bones. And the ability to create semantic devices. the sort of device that a 5-year-old child is constructing unconsciously. By the time the competition has worked out how to get it to work, we will be somewhere else entirely. What are we going to use the money on? We are continuing to develop the product, and we foresee that in 12 to 18 months, we will need to shift the technology across to licensees, and we will need people who are capable of doing that. They're going to be quite expensive. We're going to have to first tell them that everything they know is wrong, which they will appreciate, and then try to teach them about active structure. We'll get expensive failures. How big's the market? Well, I'm not going to put a number on it. You can guess how big it is. But this is a breakout product. If it works, magical things start to happen. And that's what we do. Thank you.
Thanks, Jim. Our next speaker, David, Director of Forevercorp, a specialist investment manager establishing itself as the world leader in diamonds as a new form of alternative asset investment. The company will soon be launching a global market, establishing the world's first wholesale investment fund, providing sophisticated wholesale and professional investors with access to a professionally managed portfolio of investment-grade diamonds. We'll now let David take over the showcase for his presentation.
Hi everyone, my name's Steve MacDonald. I'm a co-founder and the CEO of a company called Forevercorp. I'll introduce you to our company today. My background is having worked for many years in investment management and finance. I was a senior portfolio manager with BT Financial Group and have managed around $1 billion of investors' money. I've worked at companies like Macquarie Bank and run my own investment management company previously, which I exited a few years ago. There's other really important and very skilled members of my team, and I'll introduce you to them shortly. I'm sure you're all familiar with legal disclaimers. Ours is there, and please have a read of that at your leisure. Our business is an investment management business, and it's been created to solve a particular problem. Many times, but probably now more than ever, investors are in need of a safe haven asset that's not reliant on the banking system. They want to find an investment that's not correlated to share markets. They want something that is an asset that's transportable, tradable, a highly concentrated store of wealth that they can move around with them in an emergency or as they desire. That type of asset is something like diamonds. The problem with diamonds has been that for generations it's been used by the world's elite and very wealthy as an investment. But for most people, dealing with a diamond merchant to buy diamonds or to resell diamonds means they expose themselves to this big gap in information and knowledge. That makes it very difficult to make a wise decision when you're buying or selling diamonds as an investment on your own. Our solution is a really simple one. We're bringing to the diamond investment market the investment structure that's been applied to almost every other field of asset investment, whether it's commercial property buildings or things like gold. We're bringing a wholesale investment fund to the market for investment in diamonds. It will disrupt the diamond investment market by putting expertise and liquidity into the hands of our investors. We think it's investment made beautiful. The reason it's beautiful is that it's a safe haven asset that also offers really attractive potential returns. Other safe havens, things like banks, currently, as we're all aware, offer virtually zero interest on most deposit accounts. Gold has historically been used as a safe haven, and it's provided a strong return of around 7.2% over a 15-year period as a compound annual return. Diamonds have done even better. 10.8% is an index measure of the performance of diamonds as an investment over that same period of the last 15 years. Importantly to note, that's a measure of the diamond index. Unlike gold, which is a commodity and where an investment manager really can't add value, they can't exceed the return that the gold price delivers, each diamond is unique. A highly skilled diamond expert can choose which particular diamonds are better value, which ones are more likely to rise in price, and can make investment decisions based on that knowledge. There's a great degree of ability for an expert diamond manager, like we have, to add value and to exceed the performance of that index. So what is the market and the opportunity that we've got in front of us? Well, we think it's just enormous. It's a really exciting opportunity, and despite sort of the really difficult and terrible times that we're in, the opportunity has never been greater. The major source of pink investment grade diamonds, Rio Tinto's Argyle mine, is scheduled to close later this year. This will dramatically disrupt the market's supply and is likely to significantly increase the value of those diamonds. Our business has extraordinary scalability. After a brief and short scale-up period, we will be achieving quite attractive levels of profitability that will just grow into the future as our funds under management continue to grow. Our medium-term objective is to attract just 1% of the capital that's currently invested in gold ETFs into our managed diamond funds. If we can do that, we'll have built a business with billions of dollars under management and be a highly successful and highly profitable investment management company. Our competitive advantages are many. The simple structure of applying a wholesale investment fund to this valuable safe haven asset are numerous. Let's run through them. Firstly, we'll be the first in the world to do this. This will be the world's first diamond investment fund. We have in our team an expert investment manager with many years' experience, a global network, and an incentive to act solely in the interests of our investors. He's buying on their behalf, not selling to investors. Our fund will be audited by one of the big four audit firms. We will introduce independent valuers to come in on a quarterly basis and at arm's length provide verification and updates on the value of each and every diamond that's in our portfolio. The fund, like all other funds, will be unitized, meaning that investors are able to redeem part or all of their investment in accordance with redemption criteria. Someone wanting to pull out $10,000 from a $100,000 investment can do just that. They don't need to sell a complete asset and reinvest the balance. Investors in our fund will have access to a diversified portfolio. One of the things about diamonds is that they're very high value. So investors that identify the opportunity in diamonds might think that it's a good idea to invest and might be able to buy 1, 2, or perhaps 3 diamonds and hope that they've paid the right price for each of them so that their overall performance is strong. But by buying into a diversified portfolio, they've got the benefit of spreading their investment risk across a range of diamonds of various types, colors, sizes, and benefit from that risk reduction. And importantly, we think transparency will be throughout everything we do. Investors in the fund will see every asset that we hold, the value of each of them, and be able to track quite clearly the value of their investment. The business is really quite simple from a revenue model as well. We will have a monthly ongoing investment management fee that we will collect based on funds under management. There will be upside to this through a performance fee. We will not be relying just on rising values of diamonds to generate revenue for us. That benefit goes solely to investors in the fund. We benefit from the performance fee and the monthly ongoing fee. Our team brings together the skills that you would think would be required for a business like this. I've told you about myself. Harry Badikian is our expert head of investment. He has over 30 years experience in the diamond trade. He's a master jeweler. He's been awarded by De Beers. He has an international network. Every qualification you could hope to find, basically, Harry has, and he knows the diamond industry inside out. Davide Coaro is our other co-founder. He's an expert in the field of diamond logistics and in operations. He's our COO. And we have a marketing director with strong ties to the Chinese community, both here and in China. We're looking for additional fundings to accelerate our marketing efforts. As I said, we're ready to launch this fund immediately in the near future. We've raised some initial seed capital that will give us the capacity to do that. But because the current situation presents such a strong opportunity for us, we really want to accelerate our marketing to make this happen as quickly as possible and take full benefit of investors' need for an asset like this. We have $1 million remaining in our round 1 seed offering, which will provide investors with 10% equity in our company. Our round 2 seed raising is for a further $1.5 million, for which 9.9% equity is available. Forevercorp is making investment beautiful. We're ready to bring to market in a very short space of time the world's first diamond investment fund. We've got the capital in place to do it. We've got access to an Australian Financial Services license as a corporate authorised representative to be regulated and give investors confidence in our fund. We're confident that now more than ever, the time is right for this type of investment, a safe haven that offers the potential for strong returns. And the scalability of our business should make this a really valuable investment for everyone that comes on board with us. We're really excited about it. I hope you're excited about it too. If you'd like to have a chat to us, please reach out to us. We'd love to talk to you. Thanks a lot.
Thanks, David. Next up today is the punter's dream, Superbucks. This exciting offering allows the everyday punter to be more involved than ever with the world of horse racing from a completely new angle. Superbucks is empowering punters to invest in any horse that is nominated for a TAB meeting. Here to present this exciting opportunity is CEO Giovanni Di Michele. He's also known as John.
Hello, My name is John DeMichel and I am the co-founder of Superbucks. What is Superbucks? Superbucks is a system that I came up with over a decade ago. I've actually now put a patent that's been running for 5 years. It is a system and a method of managing virtual ownership and trading of participants competing in live sporting events. What does all this mean? So what we've done is we've got live sporting events. We are using synthetic currency, and in this case, super points, for the purpose of virtual ownership. As you can see, what I've done in this system is I've used thoroughbred racing. Why thoroughbred racing for any other sports? As you know, that there's obviously lots of other sports we can use. Superbucks is the difference between other betting sites and other sites that are looking into virtual. This is a combination of virtual ownership system. So we're using horse thoroughbred racing. It is the biggest thoroughbred system going around, only second to the US. There's over $19 billion waged throughout the racing system, and with only $5 billion in Australia. I believe that when I came up with this 6 years ago that I was going to use thoroughbred racing as my core foundation, because we needed a sport that was going to be strong, that should sustain most items that are going around that could be a negative in this world. I chose thoroughbred racing because I believe that the governments are backing thoroughbred racing. There is second tier ownerships, there is sponsorship, there is lots of prize money involved, and it is worldwide. It is a system, as they say, sport of kings. It actually has, as from late March this year, survived any other sporting event that actually has been closed down. You've got soccer, football, American gridiron, basketball, and it goes on. They've all been shut down. Thoroughbred at this day, from today, is still running. I don't know what the future will bring, but thoroughbred racing is pretty well corona proof. So I'm adopting the thoroughbred racing as a first tier foundation for Superbucks. The numbers, it all runs with numbers. And just in Australia alone, we are racking up 35,000 racehorses. There's over 180,000 starters. There's $700 million in prize money. When you invest in Superbucks and you're buying shares in this system, the market is set for you. It is already there. We just tap into the potential and the dividends of what it's giving. So as a punter or as a client, instead of wagering on a system on a win-lose, they invest on their horses. And as I say, in my proposal, there is all the numbers, which I won't go through now because obviously it all varies from 5% to 20%. But the system is definitely one that is ready. We don't have to come up with the product. The product is already there. We are tapping into it. What is the investment opportunity? Okay, we're starting Superbucks just in Australia. The patent obviously is here as far as with New Zealand, and obviously the world is another platform that we can join. Now, it's going to be very easy. As we've got the main structure of Superbucks, we then adjust the following, which will be the ingoing, the outgoings of currency, obviously the language changing, and obviously inserting and inputting the horses and the race details. So what this means is as Australia grows and the other continents and other countries grow with their racing, it means more horses, more customers, more revenue. So take Superbucks, and it's like, but not the same as if we've got shares, if we've got bank fees, if there's dividends, it is all into one. So at the end of the day, the bigger, the more races, the more horses, the more countries, the bigger the pot. We must start this in Australia because obviously we need to get the first step. Now, for the seed investors, what is your take? Now, once I've raised enough money, which obviously I will then tell you in the next slide, we need to demonstrate version part 1. Now, what is demonstration of version part 1? This is where we get real data. So the last 12 months of all the Racing Australia results, in Australia, of course, all the thoroughbred racing, we'll obviously input that to a third party that we've obviously will appoint to give us all the results. So basically we feed in the real data, and as if the system was running what we call a back-end system, and obviously that will give us the returns. The seed investors will then get obviously the real worth on the IT valuation. An independent will do a valuation going on what we believe the system is then worth. So we need to demonstrate this, because my research that I've done is what we've believed is worth. I now need someone independently to say to all my seed investors, guys, this is what you would have got. This is what your valuation is as from today. So you are looking at getting in very cheap. And I truly believe, for what I believe when I've done my numbers, it's in excess of $20 million in value. So we need to go down that track. Now, as far as this, I'm demonstrating two options here, the funds and the predicted potential. So with the funds, the demonstration IT valuations is about a $600,000 investment. My seed investors will then obviously can gain and will gain up to 20% equity, or what I say, shares. So it is the cheapest potential dividend that these guys will earn. Round one, the seed investors is $10,000 per share. Okay. We then need to take that, offer that with the new valuation, and then go through and develop a turnkey, and obviously go down and getting and obviously obtaining the licenses. The licenses is something that we obviously need, because it's new ground. We need obviously lawyers to look at the prediction of whether it's gaming, gambling, or other. Now, as we get more money in, as far as with the seed investors, the higher the return potentially back to the investors. So we can take it to a turnkey, or we can even launch the product. That's something that we need to work with. But we need to first demonstrate and revalue Superbucks. Now, like I said, your investment at the moment will be $600,000 capital for the first round seed for the seed investors. It is 20% equity or ordinary shares. This will get us the real data analysis. It will then also get us the new IT valuations. From there, we can then either launch or sell. The seed investors are on a system where it was the cheapest way and the most potential that they'll be getting in. So if you can get in on the ground, well, it could be endless. What is our potential risks? We are pioneers. Obviously, the legal rulings are very, very important, which will take place as we raise the seed investors. Potentially, we need or can and will pivot if we have to. But I believe the foundation that we've got is obviously a system that just needs to be named in a legal system of either gaming or gambling or other. So it's a system there that we need to go to the States and also to the Commonwealth. Just doing a little bit of research, it can happen, but it will just take a little bit of time, which we can obviously do this in the same time. Now, as far as doing the demonstration and doing the back end with all the data, we're looking around a 12 to 14 weeks to get those figures through. From there, we can do a valuation, which is about another fortnight. So the seed investors is a quicker analysis potentially on the value of Superbucks. So within, I would say within 90 days, the seed investors that invest the 600,000 will soon get a valuation, and they'll know where they're going within that 90 days. It is something there that is actually mind-blowing. It is real, it will happen, and it can happen. So in the summary, I was just about to say, it's not a game changer. It is a new world. You know, we are entering the world where I keep on saying you've got live sporting events that are blending into virtual platforms. You would have seen that there was car racing that went to a virtual race. They actually did 45 laps of the Indy on the weekend. There is Formula One that are looking at virtual. The world is going to change, okay? I didn't think it was going to happen this quickly. When I sat down 6 years ago, I said maybe a decade or so, but it looks like it's moving a lot quicker. Superbucks is ready to go If we have the core investors to come in, we can have this, as I keep on saying, enter this new world. There are so many platforms that Superbucks can go, but we need to keep this real, and we need to start off with thoroughbred racing. The thoroughbred racing, like I keep on saying, is our core foundation. From there, we can grow, and we can then go to whatever sports we have to. Now, only yourself as the investor will give us the future of whether now or later when we get the funds. I truly believe if we start this sooner and we make this happen and we even launch this product, there's going to be people there that do second tier investments, whether it's promotions, advertising, or even other sites that would like to purchase this. Superbucks is, like I said, I am the co-founder. I am happy. I do not need your money for 600. I need your money for the seed, exactly, so we can grow this tree into a money tree. I will guarantee you that if we go through this system and it is a game changer and it is making money, you'll be making money. It is a system there that was created a decade ago. I've got a patent on it for the last 6 years. I need this now to become real. With you guys on board, or with all the investors on board, I truly believe this can happen. Thank you, and I hope that this information is enough. If not, you can ring me personally, and obviously I have got 1 to 12 steps of how Superbucks is going to transform, and also I have also got a proposal there. Feel free to contact me.
Thank you, Giovanni. Up now to present is Dr. Robert Laylor, co-founder of Secure Health Chain. Your health data is your single most precious asset, something many of us are unaware of, and it is being sold. Dr. Laylor will be diving deeper into this medtech opportunity with an explanation of the digital health passport. Welcome, Robert, to the showcase.
Good morning, my name is Dr. Robert Laidlaw. I'm the founder and executive director of Secure Health Chain, and I'm here to talk to you today about data being the new oil. And I think there's never been a more important time to back a health tech company than now, because with the global pandemic, data is going to be defining everything that we do. Clive Humby was a British mathematician back in 2006 that said this. He said, like oil, data is valuable, but if unrefined, it cannot really be used. And I want to give a quick example here to illustrate. Netflix on the left knows with incredible, scary, really, detail what movie I want to watch next. On the right, my lovely grandma and grandfather. My grandmother goes into hospital. There's no way of telling whether she is going to get a blood clot or if she falls out of bed and is going to break her hip. And I think that's not good enough. And really, there is only one difference for that. And it all comes down to data. The data, structured connections from Netflix and other streaming services is second to none, whereas in hospitals or in healthcare for some reason, we seem to have silos of data that aren't connected in a meaningful way. There's no shortage of data in healthcare, though, I must say. Being a medical doctor for the last 10 years myself, I can say that the amount of data is doubling every 18 months, like with Moore's Law with all computer science. We used to use hundreds of gigabytes of data for patients, but they would all sit on servers in the basement in hospitals and never used again. The problems that we see with data are security and privacy, which are often used interchangeably. They do have a slight difference though, and incentives. And I'm going to talk about these each. Security is really keeping bad people out completely from the ecosystem, whereas privacy is ensuring the correct people can access the data, whereas some people will have one level of access and some people won't have the same access. But it's not about shutting everybody out. I think incentives are really self-explanatory. Our solution is a medical data marketplace secured with blockchain technology. Security that is provided from blockchain technology makes security far more secure than anything else that's available. Privacy controls using blockchain means that we can permission patients and doctors explicitly on each piece of data to allow them to access the data as they wish. The buyers for the data in the marketplace could be any technology company, pharmaceutical company, or a research organisation wanting to train up a model to make predictions to solve real problems in health. So why incentivise, people ask us? We strongly believe that as the data economy grows quickly, patients are going to demand their fair share of what is rightfully theirs in part. The ownership of data is a very complex issue. You have, I'll speak in a moment about it, but there are various players that all want to be sort of incentivized to do the right thing. And consent is particularly a grey area. If you go into a clinic these days, generally the first thing is done is a sheet of paper is put in front of you and you consent to terms and conditions. Nobody ever reads those terms and conditions, including myself. But if you were to read them, you'd often discover that you're consenting to your data being anonymized and sold away. And whilst that may be legal at the moment, I think the times for that are numbered, and very soon patients are going to be expected to be involved in the transactions with their data. Apologise for this being a bit of a busy slide, but bear with me. If we start on the left, patient has a problem, patient goes to see a doctor. The doctor does a test, and that's all done inside a clinic. So there's really three players here: patient, doctor, and clinic. It's difficult to know who, like I said before, who owns the data. Some people would say the patient. I would say that all three of these players have a part to play. The patient can't really get their problem diagnosed without the doctor. The doctor can't really do a test without having a clinic or somewhere to do the test inside. And so the concept of shared ownership, I think, is something that we're going to see more and more of in all of society, but particularly in healthcare. So following an example, on the far right, if somebody comes to buy some data from us, for example, a tumour profile on a breast cancer, they're quite valuable pieces of data, quite large data sets. You could imagine that the clinic might get $200, the doctor might get $50, and the patient might get $250. Now, us as the platform would then get 30 to 50% of the commission as well. They're not exact figures, they're just really just illustrating how the marketplace would work. So this is our EBIT really projected over 5 years. And whilst for the next 12 months, looking at maybe $1 million in revenue, you can see it's quickly going up exponentially. By 2025, it would be well over 100 million. And this is modeled using only 2 to 3 new data sets per year, and those data sets being sold 2 to 3 times per year. And frankly, I'd be able to get 2 to 3 times as many data sets every month, maybe even more. So I think these are very conservative figures, but it just illustrates the power of the marketplace. All the big four companies have recently put out reports freely available on the internet. I've referenced them at the end, but Deloitte and EY particularly are talking about digital health and how it's transforming the way business is done in hospitals. Global market for health data was 20 billion just a few years ago, and it's tipped to be sort of over 60 to 70 billion dollars every year from 2025. What we've done to date, we've built our marketplace earlier this year, and that's gone live. You can buy images now. We've now got over 150,000 images on there. They're mainly skin cancer images. There's some eye images from some of our partners. And I was showing customers through there today, and sales will begin any day now. What's really exciting on the frontier for us is we're building a federated learning platform that's going to sit on top of our existing data marketplace, and we're partnered with Data61 from CSIRO for that. Obviously, being investors, high EBIT that I showed you on the previous slides is very interesting. But it's also important to say we're being led by doctors, our company. But by being led by doctors, you know that your precious health data is in safe hands. So we've got EBIT partners. And finally, I spoke about valuing the patients and having integrity. So most large companies will just take all of the data, sell it for their own profit. What we're saying is over time, we're going to build a database to be able to share the value back with the patients. I mentioned our partners before. Sun Doctors Skin Cancer Clinics, They've got 44 clinics in Australia. They're by far the largest. They see hundreds of thousands of patients every year, and we're very, very proud to have them on as one of our very first partners. They've provided us with quite a lot of data already. CSIRO needs no introduction to this audience. They're the leading science organisation in Australia. Data61 in particular is the data analytics component of CSIRO, and we're very proud to be working on our federated learning platform with them. We've got a number of industry partners, some surgery partners, pharmacy partners, and general practice as well. Gives us a good mix of industries as we move forward, and then UTS Rapido as well. So we're looking for 750,000. That'll be new shares issued, which is approximately 18%, and that's a 4.25 mil post money val. Really, all of the money will be largely used for further engineering with Data61. So we have our MVP that's live, that has sales at the moment. We want to take that up and build a privacy-preserving federated learning, which will be world-leading. We think that we could easily position ourselves as top 5 in the world for medical data marketplaces. The team at the moment, myself, Brooke is a psychology student and about to finish up in the final year, and Dr. Katz is a skin pathologist, actually, which is partly connected to Sun Doctors. And then we have some other contracted staff. That's myself. Love to hear from you if you were interested or like to know more. We've got some other digital products we can talk about as well, but this is just a good taste and a good introduction. And here's the references to some of the data that I've referred to today. Thank you very much.
Thank you, Robert. Presenting now is Tim Hart, Director of Active Property Group. Active Property Group works with everyday Australians who are striving for financial freedom by providing access to quality investment opportunities. With a team of well-experienced investment managers, they will reveal paths and guide their clients towards 2 key areas of investment: commercial mortgages and commercial property. Tim will begin his presentation shortly. Stay tuned.
Hi everyone, Tim Hart here, and thanks for joining me. So I'm Tim Hart and I'm the Managing Director of Active Property Group, and I'm a full-time property investor since 2006. So who is Active Property Group? So we're a group of active property investors. You can see on the picture there's a team meeting we had. We flew everyone to conference last year to Daydream Island to catch up. So a really good group of people, and we specialise in private mortgage investments as well as commercial property investing. And ultimately our process is to provide high quality investments opportunities for our investors. Now there's a lot of talk in the marketplace at the moment, about the pandemic, the COVID-19, and I'm getting a lot of investors asking me, Tim, where do I invest my money, during these hard times? And so what I wanted to talk about is what can you invest in? And we've got 2 investment options now that we think are going to be absolutely amazing, not just in this current environment, but for the long term. So the first option we had is a commercial property opportunity up in Rockhampton. So if you don't know where Rockhampton is, it's up in far north Queensland in Australia. So we've got an office building here. There's no retail exposure. Quite an impressive looking building. And you can see on the right there, it's actually, we've got a picture on the map, and it shows that it's actually very, very well located. It's sort of in that little heart in the CBD of Rockhampton itself. Now, any particular commercial property, it's only ever as good as its tenants. So just to go through them, we've got Elders Insurance. So they're owned by QBE, one of the biggest insurers in Australia. We've got Artius, who have a focus on getting employment for people with disabilities. We've also got Program Skilled. They employ around 12 to 20,000 people Australia-wide, massive company and all around finding jobs for people. The next one is our biggest tenant is Sunshine Coast Medical. So they're a government organisation, and their sole focus is getting people access to the medical treatment that they need. So it might be someone who needs a nurse or a doctor sent out to their house. So you can imagine in times like this that they're going to be absolutely inundated and they're going to be very, very busy. So, and again, not just now, but also into the future as well. This is one of 31 locations that they've got. The last tenant that we've got there is National Jobs Link. So they're a non-for-profit and their whole ethos is all around upskilling people and getting them ready for the workforce and finding them jobs. So you can imagine now with a lot of people losing their jobs and even in post-pandemic world, people are going to be looking for jobs. So where we've got 4 out of the tenants that we've got are all focused around jobs. That's why we can see at the moment this is going to be phenomenal tenants. And the other big one, especially with Rockhampton itself, is we can see some phenomenal growth in Rockhampton itself. The big driver for growth is population growth. And to drive that, we've seen that there's a lot of infrastructure spending, not just at a state level, but also at a federal level. And the other thing we really like about Rockhampton is it's got multiple employers. So it's the beef capital of the world, so of Australia. So it's got a massive agricultural industry. It's got tourism. It's got mining. It's got manufacturing, and it's also got military. Okay, so it's got the Shoalwater Bay military facility up there. That's just going under a $1 billion upgrade. So that's why we believe it's got that nice long-term growth in it as well. But there's more information in our information memorandum on all that as well. Now, with this particular property, we settled it a couple of months ago. We actually managed to warehouse around 515,000 units, and we're just making them available now. And it's quite an exciting time because it's literally in the last couple of weeks, we've had 3 of our tenants come to us and not like a lot of other tenants that are asking for rent discounts. These tenants are saying, hey, we want to stay on longer. So they're extending their leases. So we've got Elders Insurance, who you can see there, their lease expires in June. We're just this week, we're signing a brand new 3-year lease with them. So they're going to be pumped out to 2023. Coming down last week, we got contacted by Program Skilled. Again, they're coming up for renewal in 3 months, and they've said, yes, they want to stay on. So we're just doing some negotiations with them. And lastly, we had National Jobs Link, who just have their lease expiring for one of their tenancies at the end of March. And they've asked that if we can just extend that lease to coincide with their other lease that they've got there. So they're going to go out to 2022. So this opportunity has become a lot better in that a lot of the uncertainty of these tenants coming up for renewal has been taken away. And one of the beautiful things about this particular investment is because we've got such low interest rates at the moment, this property is actually paying 11.2% return to our investors, okay? Now that's net of all fees, charges, everything. That's net in your pocket, okay? And that's from day one because it's fully tenanted, it's all ready to go. Now we do, as I said, we do only have 515,000 units available and we are selling them for the exact same price that we sold them to our initial investors a couple of months ago. So they're just $1 each. The minimum investment is just $25,000. And if that sounds like something of interest for you, please head over to our deal room, the APG Commercial Property Fund deal room. Now, the other option we have is our private mortgage investing. And in the current environment, we've seen an absolute huge increase in demand for mortgage lending in this in the pandemic that we're seeing. We've done more lending this month than we have usually, in a 6-month period. So we're seeing huge demand for those that need funding in this environment. And our real focus is on conservative loan-to-value ratios and also borrowers who have a strong repayment strategy. Now, what we've got is there's 2 different ways to invest in our mortgage products. The first one is direct, where you can invest directly into one single mortgage. Now, this is not for everyone. This is really for only those that have got experience in mortgage investing. You need to be a wholesale sophisticated investor, and the minimum investment is $250,000. The other option we have is a much more our preferred option with most of our investors is our pooled mortgage trust. Now, this has a minimum investment of only $10,000, And it doesn't matter if you're wholesale or sophisticated, you can also be retail investor. Literally everyone, as long as you've got a pulse, you can invest in this fund. And the beauty of this one is that it's pooled across multiple loans. So I've just got a couple of stats I want to share with you about our pooled mortgage trust. So the first one is that our average interest rate that we're paying to our investors is 11.3% per annum. That's the average from all our loans. And that's the net return to our investors after all fees, cost, charges, the lot. The most important one for me, especially in this current environment, is the risk that we're taking. And you can see that our current weighted portfolio loan to value ratio is sitting at just 60.89%. So on average, we're only lending just over 60% the value of a property. Okay, so pretty conservative stuff to be able to get those sort of returns. So in this environment, I mean, if you can find a better risk return ratio than that, then yeah, I implore you to take it. It's absolutely phenomenal. And the last one I've got there is the number of loans. So we've currently got 28 loans. So when you invest, it doesn't matter if you're just investing $10,000, your money is spread over all 28 loans. So that's 28 different borrowers, 28 different types of properties, and it's different sectors, different states. So it really diversifies your money. So that's why we see it as a great strategy in this current environment to really take a lot of the uncertainty out of it. So if you'd like to participate, as I said, the minimum investment for this is only $10,000. So head over to our APG Pooled Mortgage Fund Trust deal room and you can find out some more information there. So as we look forward to hearing from you, and as always, thanks for watching.
Thank you, Tim. Next up is Zelwin. Zelwin is a global marketplace of goods. You can buy any goods and earn money, more than any marketplace. For every purchase, clients will receive guaranteed cashbacks in tokens. You will instantly be able to exchange these tokens for fiat or other cryptocurrencies. Send them to your Visa, MasterCard, or save them. Here to talk more about Zelwin is CEO Nikolai.
Hello everyone, my name is Nikolai Shkilev. Firstly, I am a businessman with over 20 years of experience of owning different types of businesses. In parallel, I work as a mentor, advisor, and have helped more than 70 projects worldwide. And today I present to you my new big project, Zelwin, global marketplace of goods, where we combine digital assets and e-commerce market together. Why did we choose these two markets? Let's look at the e-commerce market. In 2008, global sales of e-commerce market were $144 billion. In 2019, global sales of e-commerce went up to $3.5 trillion. And now with COVID-19 crisis, online trading will grow faster and faster with each passing year. Now let's take a look at the cryptocurrency market. In 2014, trading volume per 24 hours was only $35 million. In 2020, cryptocurrency market and trading volume rose to $167 billion, and it continues to grow very fast. That's why we decided to connect these two growing markets together. We understand that while we can't compete with Amazon or Alibaba, even if we take a small part of these markets, it will be billions of dollars. You have big experience as investors as well as I do, and we know that 99% of new projects have 4 main problems. Problem number one, they don't have a ready-made product, only an idea. Problem number two, with clear business model. Number three, problem with mass adoption. And number four, problem with financing. We have resolved all of these problems. We have ready-made product, 11 teams working on this powerful project, fully financed project. We did everything for using our own money. Number three, clear business model. We have no less than 4 monetization methods. Number four, mass adoption. More than 2 billion people worldwide have bought something online at least once before. And with COVID-19 around, everyone's going to buy online much more often. We also understand that most people will go to online trading, and we are ready for it. Let's speak about our monetization methods. We have traditional way of monetization. We receive money from buyers and commission from merchant sellers. Number two, we have a built-in exchange. You can change crypto to cash, fiat to crypto, send to Visa, to MasterCard in one click. And of course, we will receive commission from both sides. Number three, we have Zelwin tokens. We don't give away any tokens to anyone, only for real money. And how does it work in practice? For example, sellers send us 100 real dollars as commission. We send $50 as cashback to buyer, but in our tokens. We still have in our pocket 100 real dollars, and then we can buy all those tokens back from exchanges for real $50. It means that in the final stage we will have $50 in our pocket, and also will have returned all tokens back. This creates a natural deficit of our tokens and can increase the value of our digital assets by several times. And number four, our monetization. In April, we are launching a powerful affiliate program, which anyone, even millions of people, can join and earn with. It's especially relevant in the world crisis we're experiencing right now with coronavirus. People can invite sellers and receive % commission from all of their sales. People can invite buyers and receive cashback from them. People can sell our partners packages and receive up to 30%. In other words, we are developing a marketplace for the people. Without restriction, absolutely anyone can join. Some will be able to earn greatly, some will not. But we are giving this chance to everyone without an exception. It will be beneficial to people, to us, to sellers, all parties, and that will allow us to create a massive community. That's why 2 big exchanges in top 5 with daily turnover of more than $3 billion signed a partnership with us and say that we are one of the strongest projects in the recent years. They will be listing our tokens and do IO, initial exchange offering, in May. These exchanges valued our project and digital assets at $150, $300 million at the time of IO, and they are confident that capitalization can be increased to $1 billion in this year. Price in IO starts from $1 for one Zelwin token, but exchanges expect $2, $5, $10 and more later. And now I'm making an exclusive offer to you. There are two options. Option number 1, equity stake, 10% for $10 million. There may be several investors buying different amounts. Option number 2, Zelwin token. Initial price starts from $1 for one Zelwin token. And for your attention, this offer is available only before 28th of April. Something to note, the company and digital assets are going to grow rapidly, so the cost can be increased remarkably and will be discussed separately. Additionally, for your information, these were the best ROI projects in 2019 for early investors. You can see it. We hope that we will make into the list. Also, here you can see what the press says about us. For example, Forbes in China, the American Reporter, etc. Also, something to note is that we got second place on an honorable rating platform HackerNoon as top 20 promising blockchain projects in 2020. So, I invite all of you to become our partner. Let's create a new giant together. Here you can see my email, Telegram, WeChat. Thank you very much for your attention.
Thank you, Nikolai. Our next presenter today is Proeprties Pathways. This dynamic commercial property investment firm proactively handpicks properties throughout Australia to reduce risk and protect investor returns. The average return of completed syndicates have provided investors 19.22% per annum.
At Properties and Pathways, we like to keep it simple. So let's start with the end in mind. Why are you here? We assume you're here to find secure, high-yielding investments backed by fantastic tenants. But not just that, you're looking for the right properties in the right locations, managed with absolute transparency. So then why are we here? Why are Properties and Pathways here? Well, we believe we'd answered those questions and we've found the right properties, we've found the right locations, and we've taken those assets and thrown them together into a diversified trust, which ultimately ticks those boxes. And we've invested alongside you to put our money where our mouth is. I'm Cal Doggett, the Managing Director of Properties and Pathways. And over the next few minutes, I'll just run you through what it is that underpins Properties and Pathways and our most recent investment opportunity. So why Properties and Pathways? We'll start at the top. This is the statistic we're absolutely most proud of, an 88% investor reinvestment rate. Now this talks to a whole bunch of things, but I want to break it down even easier into these two categories. It comes down to proven performance. No investor is going to reinvest unless we do what we say we're going to do, and unless we can consistently show that we're able to deliver on outcome. Now, on the other side of that, the investor wants to know that at every stage during the life of any asset, at every stage during our relationship, we're absolutely transparent at every turn, and that we've got skin in the game. So what is proven performance? Well, it's a portfolio that sings. Now, we believe a 95% occupancy rate is absolutely phenomenal. It's a really proud statistic of ours. The best portfolio in Australia is not going to be worth anything unless it can yield for the investor and yield for the manager. It requires occupancy. That means we're able to put ourselves in our tenant's shoes and really understand what's driving them. Now, behind that portfolio is a remarkable team. It's a team which has capabilities to generate amazing outcomes and has done so. It's a team of integrity, of 88 years property experience, canvassing feasibility, acquisition, investment, leasing, divestment, you name it. But what's really fantastic is that majority of our team are invested in our syndicates, which shows that they not only deliver, but they believe in what they deliver, which then talks to our results. 19.16% an annualized average rate of return, or internal rate of return, if you want to call it that, over the life of completed syndicates. Now, those syndicates are ones that we've acquired, added value, and sold. And here are our results. It's really important to understand that this is not the highlight reel. This is the entire reel. We're a small knit team that goes after very niche assets that adds enormous value. So we don't have billions of dollars of property under management. We're quite the opposite. Very selective on what we go after. We're very risk averse, but we make sure that underpinning every asset that we acquire, every trust that we put together, is a propensity to add big value and deliver an outstanding return. And that's evidenced by this slide. Transparencies. What does transparency mean? It means that we invest alongside you. We put our skin in the game. It also means that there's no ambiguity along the life of any asset tenure about what we're charging and how we're charging it. We never want our investors questioning what are the methodologies and what are the processes behind how we go about doing what we do. So we've got a very simple fee structure of 3 different fees. But the one I just wanted to briefly touch on is the annual asset management fee, which is the only management fee we've encountered, which absolutely aligns the investor's interests and the manager's interests at every decision, not just maximizing rent, not just maximizing return, but what are the interest rates that we're fixing? How can we minimize cost? What are the flights or what are the travel costs that we're going through? How do we minimize that? Do we need to lease this asset externally and pay $100,000 to an agent? Or can we manage this outcome internally? So what we've developed is a structure with absolutely no hidden fees at all throughout the life of the trust, throughout the life of the syndicate, which means that the investors know at every turn exactly what they're being charged. And that is being levied only on the net trust income, which carries our interests at every single decision, in good environment or bad, in good economies or bad economies, in great outcomes or bad outcomes. At every turn, we're on the line. So why the Pathway 12 unit trust? Well, the ethos behind creating this trust was we wanted a diversified trust. In times of economic uncertainty, you want diversification and security. We wanted something that could sit in our investors' portfolio for many years and bedrock, be an absolute bedrock, but deliver a stable return. And then our investors got a bit greedy and they said, okay, we want all that, but we also want there to be an enormous propensity for value and land value to appreciate over time. So we had to look in counter-cyclical locations, and that's what we've done here. We've got a 8% per annum average cash distribution over the first 5 years. We've got a diversified trust with 3 properties, 7 rental income streams, 2 asset classes in 2 different locations, in 2 different states. We've got security with a loan-to-value ratio, which is very modest at 55%, non-recourse loans. But here's an interesting statistic. We've got all that while maintaining over 50% of the property value being maintained in the actual land. Now that's what appreciates over time in property. So it's a great statistic. It's a really comforting one for us. And it's something that our valuers have pointed a stick at and said, this is why we believe you're buying with value. You're buying at the right time of the cycle. You're taking the research and the due diligence on your backs and actually understanding what is it that's underpinning these assets. But the last thing I want to touch on here is that 54% of the income is backed by the federal government, state government, and ASX listed subsidiaries. And in times of uncertainty, that's exactly what you want. in the midst of a global pandemic threatening economies around the world, is there more secure tenant than the Australian government? When the ASX and stock exchanges are plummeting 20, 30%, and even banks are underperforming, we are absolutely comforted by the fact that there has never been a greater need for Centrelink right now. And that is underpinning and absolutely securing this trust. So these are the three assets which are extensively detailed in our information memorandum. But just quickly, we have an industrial asset in WA in a core precinct of Welshpool with fantastic arterial links. We've got an industrial asset in Queensland in the southern west corridor of Crestmead, which is a pocket we're very familiar with. We have multiple assets there already. And that delivers an occupancy for that tenant, which is spot on. And then we've got a Centrelink anchored shopping centre or office really in Mirrabooka in WA. And that demographic absolutely suits that tenancy profile. So that's detailed more in the information memorandum. But this is the methodology that I just wanted to fly through, in that it's an absolutely pragmatic and structured approach to how we acquire properties. We start at a state level and we work down this inverted triangle to make sure that at every point in time, we're asking ourselves the question, is this asset relevant? Is this location relevant? Is this rent right now? Is this relevant? Is the sector relevant? And not only do we need to answer that question today, but we need to be so sure in our research that we can answer that question tomorrow to make sure that this asset is going to stand the test of time. And here are some research. Here's some research that we've gathered from papers across Australia from different sources to support exactly what research we're doing at every point in turn, but also to support the assets that we've bought and the why behind why we bought them. The investment structure is very simple here, guys, in that we'll give a monthly distribution reliably to our investors. We use a unit trust structure, which is the most tax effective with a huge proportion of deferred tax income. And the other thing I just wanted to touch on is our interest rate certainty. We have an ethos of locking our interest rates for 4, 5, and 6 years to really bring certainty to the cash flow profile of this trust and of every trust that we establish. So here's the offer here. We've got $3.2 million left to raise, and the last asset settled only 2 weeks ago in the middle of March. And we are so comfortable and absolutely confident in this trust that we will guarantee the return of 8% for the first 2 years for any investment over $250,000. Now that's putting our money where our mouth is. We protect capital first. There's no point adding value unless we do that. We're absolutely proud of it and we have to do it, particularly in economic times as we're in right now. We've got to protect our capital and then we look to add value. And we've got a great proven track record of doing that. And that's why we enjoy an 88% reinvestment rate. So we hope we've understood why you're here and we hope we've answered those queries. Absolutely. Thank you for listening.
Thank you for joining us for our first Wholesale Investor virtual showcase. We hope you enjoyed the experience. To register interest in any of the companies which participated, you simply need to go to the company's page in their crisp deal room. They'll have an overview of the company. You can request access to the company's deal room as well as you can ask questions to the companies there as well. And also as a special note, how we grow is typically by referral. So what I encourage you is when you see the information for our next virtual showcase, we encourage you to invite your relevant investor networks to join us for that event. One thing we always like to really highlight as well is that the companies that we work with are working 24/7 to build their business. They are passionate, they are driven, and they work incredibly hard to make what they see as a vision real. We thank you for joining us. If you'd like any more information on Wholesale Investor, there is a link on the screen. You simply need to click it, enter, fill in your information, and then one of our team will reach out to you. Thank you, and once again, we appreciate you joining us.
you.